Welcome to this week's edition of World Crisis Radio. This is Webster Tarpley speaking to you from Washington, D.C. Now, we're recording the program on Friday, August 5th. We are now back in the middle of the Depression, the breakdown crisis, the disintegration of the world financial system, which has been going on since 2007, 2008, since the fall of Countrywide Bank, Northern Rock, Bear Stearns, Lehman Brothers, and then everything else. This is proceeding apace. Now, let's just get the empirical picture. We can then describe what the causes of this are. They have a lot to do with the crisis, the extortion practiced by the Tea Party around the U.S. budget question and the debt ceiling has indeed introduced fears and strains into the world economy, which have set the stage for the current crash. But let's take a look at this crash. Already on Tuesday of this week, even as the U.S. Senate was getting ready to approve the Satan sandwich, right? The Satan sandwich with Satan fries on the side, Obama's capitulation to the forces of reaction and cutthroat, brutal, genocidal austerity. On that same Tuesday, we already had a sell-off beginning in Asia. This is simply inspired by the tremendous fear around the idea that the U.S. might default, that you were 24 hours from the deadline, and likely that it was not clear to anybody, at least, that there was no solution in sight. So on that Tuesday, this is the 265-point fall of the Dow, which Limbaugh and others tried to blame on Obama. No, I'm afraid not. This goes to the account of the Tea Party in the sense that they are the ones who decided on this policy of extortion and brinksmanship. Now, inevitably, what did this do? When you have the specter of the default of the United States, the bankruptcy of this country, that addresses, of course, the dollar, the world reserve currency, most central bank reserves still held in dollars, and it also goes to the issue of the U.S. Treasury bond, which is, after all, what would be defaulting. This created great fear. Great fear was abroad in the world. Where was the safe haven? If it was no longer the Treasury bill, where would it be? It meant that large amounts of cash were fleeing into places like Japan, into Switzerland, and into Germany, into the Bund, the German government bond, leaving places like Italy, Spain, their bonds and their stock markets, leaving all kinds of stocks into bonds, but only bonds of certain countries. Now, after the solution, or at least the papering over of this extortion crisis that we had, some of that money has now also begun going back into Treasury bonds. Indeed, the Treasury bond, the yield on the 10-year is now 2.47, which indicates quite a healthy demand, that the world really can't get enough of these U.S. Treasury bonds. They want to have them because that's safe haven. But you get the idea. The flight of liquidity out of Italy and Spain in particular, under the influence of this debt crisis, made it then easy for the hedge fund hyenas to come in with their inevitable credit default swaps and begin to attack Italy and Spain. And I guess by this week we've got the premium, the spread that they all talk about. The spread. What's the spread between a Spanish government bond and a German Bund, a German government bond? That has been getting quite large. The spread, I think, is about 3.7%. By Tuesday, the spread for Italy was 3.7%, and for Spain, 3.8%. And that has varied. Sometimes the Italian spread has been bigger this week. So it started on Tuesday as a direct result of the fear that had been introduced by the brinksmanship and extortion of the Tea Party fanatics. Again, simply tampering with this, you are playing with fire, and it will be ironic if the entire world economy comes down as a result of the lunatic, reckless, irresponsible, extortion, blackmail behavior of the Tea Party in Congress and their backers. The people who say that a default doesn't mean anything. Well, you can imagine what a default would look like. Take a look at what you've got now. Multiply that by 10. That would have been the aftermath of a U.S. Default. So that has now turned into this crisis on Tuesday and then on Wednesday. Remember that it's easy to attack the bonds of Southern Europe. It's August. It's vacation time. We're headed towards Ferragosto, the famous Italian and indeed all Southern Europe. On August 15th, the feast of the Ascension of the Virgin Mary, Italy, Spain, Bavaria, all Catholic places shut down. They're all at the beach. So it was easy then to go into those relatively quiet markets with a heavy dose of credit default swaps, take advantage of the fact that money was fleeing anyway just because of the general climate of fear, the fear of the U.S. Tea Party and their lunatic policies, and therefore you could get this crisis going. So that happened on Wednesday. And then by Thursday, yesterday, this was a day of quite some carnage. Let's just take a look at that. Right? What was the situation here on Thursday? Thursday was the day the Dow was down 513 points, 4.3%. That's the worst result for the Dow in a single day since December 2008. For the S&P, I think it's the worst result since February of 2009. The stocks to watch in the U.S. are the banks. Bank of America was down 7.5% on Thursday. J.P. Morgan Chase was down 5% on Thursday. UBS, Union Bank of Switzerland, down 8.63%. Citibank down 6.6%. Morgan Stanley down 6.28%. Goldman Sachs down 4.24%. Lots of carnage among the banks. That's, of course, where the crisis is. And on that day, the Italian spread was up to 4.06%, and the Spanish spread was up to 4.05, with the Italians looking a little bit worse. Japan was down 3.7% on that day. The Nasdaq here was down 5%. Britain down 3.4%. In Europe, Austria down 4.2%. Hong Kong down 5%. Nikkei down 3.7%. You got the picture. Taiwan, 5.6% losses. In particular, on Thursday, the Italian market down 5.16%. Spain down 4%. That's the worst result in 14 months for the Spanish stock market. Now, they say everybody will tell you that the Italian market is the worst performing in Europe, but don't look now. Brazil is worse. The Bovespa of Brazil, this place that was supposed to be the new paradise of the new world economy, turns out to be feet of clay, I'm afraid, with this Brazilian stock market going down. It shows how illusory a lot of this stuff is, that it's built on a profoundly weak economy with huge numbers of poor people. So the demand on Thursday was raised that the Italian austerity program was not enough. The Italian austerity program brought forward by Berlusconi is about $57 billion. The austerity ghouls, the hedge fund hyenas, began coming forward saying, no, $57 billion is not enough. We want much more. We want double that, and we want it now, because Berlusconi wisely backloaded the austerity program. Tonight, Friday night, Berlusconi will address the Italian nation and talk probably austerity if the hedge funds get their way. Back in a minute.